Yes, dear students, we are back with a new chapter, balance of payments and exchange rate. So, I hope you know the meaning of economic transactions. Economic transactions are those transactions where there is an exchange of money. But if you give a gift to someone, then gift there is no exchange of money. Now, various economic transactions take place between the various countries of the world. An account needs to be maintained of the economic transactions. So basically, international transactions, the government should have the information. Not only government, the other relevant agencies about the international position of trade and capital flows of the country. So basically, we are trying to concentrate on the trade exchange and the capital flow exchange of the country. Why do we need to have the information? So that it enables the government to evolve appropriate monetary, fiscal, and trade policies. So, dear students, the government of India makes monetary policy. Yes or no? Yes, sir. The government makes fiscal policy. Yes, sir. The government makes trade policies. Yes, sir. So the government should be aware of all the economic transactions taking place with the other countries. The record of transactions among different countries is known as balance of payments. Once more, the record of transactions among different countries is known as balance of payments. So we need to know the definition, we need to know the components, we need to study the reason for disequilibrium of the balance of payments, and we will also study the policies which we can make to correct the disequilibrium of balance of payments. And we will also discuss issue of foreign exchange. Foreign exchange. What do we mean by foreign exchange? When we buy something from America, they will need their currency. So when we are buying from America, let's say we are buying something for $100. So we need to exchange our rupee. And let's say if $1 is costing 75 rupees, so we need to pay 7,500 rupees, get $100 and then pay. So this exchange system is called foreign exchange, where we exchange our home currency rupee with the foreign currency. I hope it is very, very clear. Now the question is, the various countries of the world, they are doing trade with each other. Why? Of course, it is a business proposition, economic transaction, and as well as the standard of living could be increased. So people in America, they made an iPhone, but people in India, they want to use the iPhone, so they are also increasing their standard of living. Now every country is doing certain trade with some other country. So all the economic transactions with each other countries of the world, they maintain balance of payment account. The balance of payments accounts of India measure the economic interactions of India with other countries. Now, these interactions, they would definitely include sale of Indian goods. and services abroad. Will it include only sale? No, sir. Interaction means it's a give and take policy. It's a sale and purchase policy. So we sell our goods manufactured in our country and our services to abroad, which we also use the word export. We also purchase foreign goods and services, okay, which we term it as import. And these were about the goods and services. But there are also inflow and outflow of capital. So, dear students, inflow and outflow of capital is also one of the very important transactions taking place between various countries. So, the balance of payment is a flow concept. We calculated it on an yearly basis. The balance of payments of a country is a systematic record. So, it is a systematic record. Now, we are trying to define what exactly we mean by balance of payments. Of all, mind you, of all economic transactions between the residents of one country and residents of foreign countries. So, if Anushka Chaudhary, a resident of India, is getting into an economic transaction with Billy Jones of America, so this economic transaction would be recorded in the balance of payment of the country during a given period of time, which is generally 1 year. So, what are the main facets of this definition? Systematic record of economic transactions, where economic transactions we know it means the flow of economic goods and services and the assets. It involves payment and receipt of money in exchange of these flows. But certain economic flows may take place without any payment, such as gifts from abroad. Such economic flows are in the nature of transfer payments. Please, dear students, transfer payments. So, these transfer payments are not to be considered as economic transactions. Now, it's very important to understand residents of a country. Residents of a country means the normal residents of the reporting country. Reporting country means the country who is preparing the report. So, balance of payment is a report. So, balance of payments is also a flow concept. We create the report on the basis of a time period. So, can we conclude that balance of payments is an account? Okay. When we say account, generally we can recall the T format of debit and credit, left side and right side. So, here also we have two sides, the receipt side and the payment side. Thus, balance of payments is an account of all payments made by a country to other countries and all receipts by it from abroad during that period of a year. So, we have completed the definition portion of it. Next day, we start the components of balance of payments. So, all the very best. Take care. Bye bye.